Yo, GM, what's good, fam? Welcome to Hidden Secrets Revealed Live. Today on Hidden Secrets Revealed Live, Lemonade on the New York Stock Exchange LMND is not profitable. Should we buy the Stonk anyway? HSRL is a production of Safe New Media. Who this is for? Self-actualizers, agents of progress, if you will, making the most of their lives. This micro podcast live stream is not for you. It's not at all. Yeah, no. It's not for you. If you take yourself too seriously, if you are a seeker, let me be your guide to discover divine and fundamental truth for yourself. Let me help you increase the quality and effectiveness of your life by revealing to you the hidden secrets of the universe. This show is specifically for those who are seeking new perspectives, fresh ideas, and a willingness to explore new possibilities. My intention is to help you stay ahead of the curve and make the most out of emerging opportunities. As you know, there are many in our community who may want to apply my unique perspective to their own businesses in developing new products and services. Tell me what you think I can do to help you in our private Telegram chat accessed via guild.xyz/deep tribe. Today on HSRL, let me warn you first. Warning, this is a long one that may be boring to some people. It may not get a lot of views. I'm okay with that. I don't care. Before we go further, there's a good chance I may get a detail wrong. So you're welcome to correct my misconceptions. On my quest to learn more about how successful businesses work, today my curiosity led me to investigate Lemonade Inc. on the New York Stock Exchange, LMND. Since there will be an upcoming shareholder call on May 4th, may the 4th be with you. The year is 2023 as I'm recording this live right now on Twitter and YouTube and LinkedIn. We'll look back at this and laugh at me. So the shareholder call is on May 4th, 2023. They last issued quarterly earnings data on February 22nd, 2023, this year. And it's expected to report earnings on May 3rd after the market closes. The company reported a loss of 93 cents per share for the quarter, beating the consensus estimate of $1.17 by 24 cents. The business earned $88 $88 million, $88.40 million during the quarter, compared to analyst estimates of $78.23 million. While I currently don't own any stock in the company, it would be beneficial to explain why I don't. Firstly, this is not financial advice. As always, do your own research. This is strictly for educational and entertainment purposes. My preference is to invest in ETFs that pay dividends, which LMND does not. The reason for my interest in the insurance business is due to its proven reliability as a solid industry and financial tool. Most insurance companies operate on margins as low as 2% to 3%. The ideal profit margin for an independent insurance agency is between 2% and 10%. An insurance company's annualized profit margin can change from year to year based on the number of claims it receives, policy price changes, and changes in the cost of services. The calculation of net margins is significant to the companies in the insurance sector because the values are so low. The profitability ratios of individual insurance companies can vary based on how they are run, from marketing to sales operations to risk models. In 2019, Cigna had an operating margin of 5.3%, which was the highest among the top insurers in the United States. Therefore, the profit margins of insurance companies can vary depending on various factors, including the size of the company, how well it runs its business, the type of insurance it provides. When I say Lemonade is not profitable, that statement is true and not true at the same time. How? Let me explain. Lemonade Inc. is a holding company which engages in the provision of insurance services. As an insurance company that provides renters, homeowners, pet, and life insurance products powered by AI, this is an attractive company. Lemonade's business model is based on reinsurance, which uses technology to minimize risk while maximizing trust and social impact. Reinsurance is insurance that an insurance company purchases from another insurance company to insulate itself from the risk of a major claims event. With reinsurance, the company passes on some part of its own insurance liabilities to the other insurance company. Lemonade charges a flat fee and uses the rest of premiums to pay claims, and any excess underwriting profits are donated to charity. Yes, they're donated to charity. The company generates negative adjusted EBITDA, negative adjusted EBITDA. Come on, you know what I'm trying to say. EBITDA. Negative adjusted EBITDA margins to expand its growth, and it's spending massive amounts of money to expand its business. Negative adjusted EBITDA margins mean that the company's earnings before interest, taxes, depreciation, and amortization are negative after adjusting for certain expenses. EBITDA is a profitability ratio that measures how much in earnings a company is generating before interest, taxes, depreciation, and amortization. Adjusted EBITDA is calculated by adding back certain expenses to EBITDA, such as stock-based compensation, restructuring costs, and other non-recurring expenses. Negative adjusted EBITDA margins indicate that a company is losing money even after adjusting for certain expenses, which could be a red flag for investors. So, Lemonade believes that its success will depend on its ability to extend its brand position, provide its customers with outstanding value and superior shopping experience, and achieve sufficient sales volume to realize economies of scale. This company intends to continue to invest heavily in marketing and promotion, product development and technology, and operating infrastructure development. Lemonade offers attractive pricing programs. These have reduced its gross margins due to relatively low product gross margins. Achieving profitability given planned investment levels depends on the company's ability to generate and sustain increased revenue levels. So as a result, they will continue to incur substantial operating losses for the foreseeable future. And the rate at which such losses will be incurred may increase significantly from current levels. So, if they're losing money, why invest? The company is a public benefit corporation with a double bottom line, which means that profit maximization and social impact are mutually reinforcing. So, while some investors may argue that the company is overcomplicating its business, Lemonade's unique business model and focus on social impact have helped it to stand out in a highly competitive market. Lemonade donates any excess underwriting profits to charitable organizations through its Give Back program. The company charges a flat fee and uses the rest of the premiums to pay claims, and any excess underwriting profits are donated to charity. The Give Back program is not traditional philanthropy or corporate social responsibility, but they call it a socially impactful business model. So this is kind of a differentiator with Lemonade, right? The company's community selects the nonprofits to receive the leftover premiums through its annual Give Back program. Since 2017, the Lemonade community has donated over $6.2 million through its Give Back program. Policyholders choose a cause to support when getting an insurance policy. In 2020, the Give Back program donated $631,540 to 25 nonprofit organizations chosen by policyholders. In 2021, Lemonade's community helped donate over $2 million to 65 vital charities. So, as far as the headline of today's episode, listen to this, okay? Lemonade reported a net profit of $2.6 million in Q4 2021. Therefore, it's true that Lemonade is currently profitable. Wait, didn't I say Lemonade is not profitable? What would explain the discrepancy here? The discrepancy between Lemonade Inc.'s net profit of $2.6 million in Q4 2022 and negative adjusted EBITDA can be explained by the fact that adjusted EBITDA is a non-GAAP financial metric that excludes certain expenses such as interest, taxes, depreciation, and amortization from the calculation of earnings. Adjusted EBITDA is often used by companies to show their operating profitability. It provides a clearer picture of the company's cash flow from operations. So in Q4 2022, Lemonade's adjusted EBITDA loss was $50.3 million, which was lower than the $40.4 million loss in the year ago, in the prior year. So the company reported a net profit of $2.6 million in Q4. The adjusted EBITDA is a more accurate measure of the company's operating profitability. It takes into account expenses incurred by the company. So therefore, the discrepancy between net profit and adjusted EBITDA can be explained by the fact that adjusted EBITDA is a non-GAAP financial metric that excludes certain expenses from the calculation of earnings. In conclusion, if you find this information relevant, if you're still watching this far, you're welcome. If you can offer more clarification, again, like I said, correct me where I get some details wrong. Leave a comment and join our community. Hidden Secrets Revealed Live is a production of Safe New Media, unconventional, diversified, global digital media company devoted to the practice, administration, and the dissemination of the ideologies of its founder, moi, yours truly. My name is SeanAllenFenn.eth, and this is totally not a cult. It's not. The plan is for our community to share with each other the systems, processes, and workflows we're successfully using in order to help each other grow. So if you're along for the ride this far, ask any questions about today's show or anything else in the private chat that you can access via guild.xyz, guild.xyz/deep tribe. There's a reason why it's gated. And I recognize that not everyone's going to get in there, but I appreciate you guys. uh, who catch my drift, right? The reason it's gated is because my audience is a Web3 audience, and it's where I'm not really inviting, you know, uh, anybody into the community. Team up with me to bring about serious advancement for others. Thank you for making this the most popular live stream at this hour, broadcasting live on Twitter about this topic. I'd be surprised if there's anyone else going live right now on Twitter talking about this. So thanks to you guys. I do this live for 10 minutes, sometimes more, sometimes less, Monday through Friday. It's for fun. And leave a comment. Even if you make fun of me, I don't care. Retweet this, share this with somebody. I guess that's it for today. That was a lot of information. I know. I appreciate you guys. I have spoken.